Hello and good morning. It's Adil Fazal here, market analyst at CFDs.com, a leading spread betting and CFD brokerage. Be sure to visit CFDs.com to certainly learn more with regards to the products and services on offer. Alternatively, you can visit the educational website where I post my charts, analysis, etc. throughout the day. Obviously, these videos as well are all posted there as a source. And certainly be sure to watch out and look out for the new app that's going to be available, which is going to be sending everything onto an app and make it easily understandable and user friendly. Okay, right. This is a European market morning wrap, and let's see if we can decipher exactly what's happened thus far. Okay, in terms of European markets, okay, so we can start off with Asian markets first of all. The Asian markets, we had the Nikkei down almost 1%, minus 170 points overnight. The yen strengthened and a risk-off tone there. We did have the Shanghai down almost 1% at one time, or even more than 1% overnight, until it actually reversed and pushed higher. And that's mainly led to central bankers, or PBOC, because they are adamant that their rate cut certainly works. So any chance or any attempt at the Shanghai falling, they will certainly intervene and prevent that from happening. Now, we just have to sit back and ask ourselves, this is the same question that I put on my Twitter feed, and those that follow it, so certainly be sure to follow my Twitter handle. It's CFDS underscore education, and alternatively my personal one is trader Adil trader, so or trader Adil. But certainly think and contemplate that ever since the actual Chinese did actually go ahead and surprise the markets with their late Friday interest rate cut, the Shanghai hasn't actually moved at all. If I bring up the chart of the Shanghai, and this is one of the things we have to consider as traders and ask ourselves, okay, we've had this Chinese rate cut, and what impact has it made? Nothing whatsoever. It certainly has not made an impact. We did attempt to sell off today, we did reverse, and that's certainly circumspect as well at best. Okay, so certainly is a cause for concern. So therefore you had the Nikkei down as well, so therefore it's a risk-off scenario. The US markets overnight certainly finished negative. And as I explained last time with regards to the S&P, and I have showed this on for the last few days now in terms of Friday and Monday as well. If you look at the S&P 500, you can see that we actually hit the gap fill at 2080 or 2079, and ever since then we've certainly stalled. If you look at the price action on the 60-minute, it certainly is not a bullish chart. Okay, certainly a failed bull flag, and you can see that we broke out this bullish trend line as well. You have the unfilled gap below to around the 2052 level, and we are looking at a lower high at present. So we have not made a higher high, and we are looking at a lower high with a projection of possibly moving down. And again, 2054 and 2053 are key areas of support for the S&P 500 on the downside. Okay, so certainly remains weak. And also, if you look at the Russell as well, you'll see that the Russell chart is not confirming or supporting this bullish view. Okay, so that's obviously the fundamental backdrop from a macro perspective in terms of the Asian markets, US markets, inter-market analysis perspective. Now, in terms of economic data this morning, and looking at the markets from that perspective, now we had a risk-off scenario in European markets due to several reasons. Number one, obviously the Asian markets were weak, the US markets obviously were weak. We did have weaker Chinese data overnight as well. That certainly didn't help in terms of industrial profits falling overnight. We have the Fed meeting, again that's a cause for concern. The main reason for the European equities, specifically European equities, is because we had the French FinMin, Mr. Sapin I think his name is, and he had comments that were very anti-QE in nature, very negative towards QE, in the sense that he was stating that the current monetary policy is appropriate and it's very hard to justify further QE, therefore denting the argument on Mr. Draghi that in December we will have to review again, and we will have to discuss whether or not we need QE. So the market certainly has overpriced or priced everything in terms of QE or into the market. So any disappointment, etc., will create and cause that whole rally to be unwound. So therefore, that's a bearish, obviously, bias or bearish sentiment. Kicks in the bearish sentiment. And we had commodities certainly weak as well. Although copper did push higher, but oil certainly has been languishing at the lows. Okay. And we also had weaker EU earnings. So we had BASF cuts its outlook. We had a stronger dollar crimping Novartis Q3 revenue. Canon's outlook zooms in on China's slowdown. So there were several, obviously, your EU companies reporting that, obviously, were reporting negative. Now, the only bullish argument for the FTSE 100 this morning was the likes of BP. BP certainly beating in terms of earnings, and is one of the actual bellwethers, or the one that's outperforming this morning. Now, if I just bring up a chart of BP, bear with me, and I can show you. See how the chart of BP is performing, and just demonstrate. Okay, here we go. So we certainly had an uptick higher ever since then. It has certainly sold off, pulled back, but we certainly had a gap higher. You can see we've got close at 383, and the pivot higher was 393 thus far. So that's certainly dictating the movements on the FTSE 100. Okay, so it's certainly very important going forward. Okay, so the technical formations now. Let's start off with the German DAX as always. Okay, so the German DAX certainly is into this gap level of resistance. So again, that certainly needs to be observed. 60-minute chart, we've not made a higher high. We've certainly held that resistance zone and certainly held it very well. 10-minute chart, we are holding gap fill resistance at present, and we are looking at potentially propelling lower. Now, we did have this H&S formation initially, and this is the one that I was certainly observing. We have negated that H&S formation now, so that's certainly out of the equation. We had this classical H&S formation here that I was expecting to play out. Obviously, we've regained the actual neckline, so certainly out of the equation for now. The key resistance remains that gap fill at that level here, and then obviously you've got horizontal resistance above, and then they basically will remain as the key resistance points and zones. Okay, so you have support down here. Okay, you've got an unfilled gap below at the 10,480, 10,490 level. Okay, and that's something that we're going to be watch out for very, very carefully and observe. Okay, in terms of the German DAX itself. Now, we can always cross-reference the DAX with the MDAX, and you can see that the MDAX is obviously into horizontal resistance as well, and is certainly holding. You can look at the Tech All Share as well, and you can certainly see that we are attempting a pullback on the Tech All Share Index, and certainly have found resistance there. Regardless of the actual Nasdaq itself, we are finding resistance in that zone. Okay, and also the Nasdaq itself did show weakness yesterday as well. Even though we have earnings from Apple, etc., it certainly was showing weakness overall. Okay, now let's cross-reference that with the actual French CAC now. Okay, and you can see the French CAC, ever since it hit gap fill, it certainly has been retracing. Okay, and certainly finding weakness. The pivot low that we put in this morning is around the 4860 zone. So again, that will certainly come into play today. Going into today, that's going to be quite important and realistically. So again, these are the zones that we're looking at. So lower lows and lower highs overall in Europe, and that's mainly due to the anti-QE comments that have emanated from the French FinMin. The Euro stocks itself attempted to go higher, close the gap, and obviously has found resistance ever since. But yeah, a low of 3395, and again, you need to be made aware of the unfilled gap below, which is around the 3350 zone, and that certainly needs to be respected from a technical view. Okay, now the FTSE 100, again, like I said, it has been supported by BP. Now the daily chart itself certainly has put in a potential double top now at 6,450, and that certainly is a fierce resistance zone. The 60-minute chart on the FTSE 100 is holding previous resistance equal support well thus far, but again, one needs to question the fact that this may well just be consolidation for a bear flag formation, then obviously looking to potentially make a new low and retest this key diagonal trend line. The 10-minute chart on the FTSE 100 itself, again, like I said, is holding previous resistance equal support at this 6390 level, and certainly is trading sideways thus far. So again, we'll watch that and observe that for now. But given the fact that BP is obviously holding well and has gapped higher, that certainly is helping the FTSE 100 remain afloat thus far. Okay. Now, in terms of the Aussie and Kiwi, we are finding resistance on the Aussie, and also the Kiwi is into resistance as well. You have a H&S formation, so that does not bode well going forward. Now, we do have a US economic data on tap today. We have durable goods, red book, and PMI, so that will dictate the strength of the dollar, and that will obviously force the hand on the Kiwi and the Aussie in terms of the next move. But again, the overwhelming concern, obviously, we do have US earnings coming through at present, but the overwhelming concern really is, from my perspective, is the fact that China has failed to rally. That's the biggest concern. Okay, we also have Apple earnings out overnight, so again, that will be very volatile in terms of trading the Nasdaq. Certainly bear that in mind as well. So these are all factors that we have to consider as traders. But for now, in terms of European session, we've had weaker UK data in terms of GDP and services and construction certainly come out on the downside. The only thing that's helping the FTSE 100 up at present is the chart of BP. So again, look for resistance on BP, and that should certainly put in a potential pivot top on the FTSE, and then you will be looking for further weakness on the and then obviously potential new lows. Okay, so Shanghai is certainly weak, Nikkei weak, the S&P 500 is obviously into resistance. The FTSE 100 is certainly biding its time for now. How long it can sustain its or oscillate between this 6390 and 6405 level, we shall see. But overall, you are making lower highs, and certainly bear that into consideration. Adding the fact that you've got anti-QE talk, weaker economic data, weaker earnings out of Europe, and that certainly doesn't bode well for European markets going forward. I think that's a wrap. Be sure to visit www.cfds.com for your trading needs. Goodbye now.